Welcome back. You're with Money, 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 and this week it's all about getting smart with your taxes. Now, as a parent, you might be saving up some money for your children's future needs, their education, etc., maybe through mutual funds. So the question is whether you should be redeeming the money and then paying off your children, or is there a better, more efficient way of doing that? Mr. Roongta?
So, I mean, you see lots of parents who have really invested well, and they've also moved it to debt securities as they come closer to the goal. But they are high taxpayers. So, I think one of the key ways in which to save, so if it is long term, then obviously if it is a debt security and long term, the tax incidence becomes much lower.
Right.
But there is still some tax on it.
Yeah.
So, I think one of the things that you can definitely do without any issues is to gift the units to the child, as long as the child is a major.
Okay.
Above the age of 18 years.
Okay.
Right? The advantage of gifting the units, anyway the money from those units was meant for her or
the children,
him.
Yeah.
Right? Instead of giving her the money, if you gift the units, the advantage is that now when they redeem it, the capital gains would be calculated as if I was still holding them. My period, my costs would be taken into account. But it would be taxed in his or her hands.
So the tax liability actually shifts to the child.
Okay. If she has no income, then, you know, that first 2.5 lakhs is not taxable at all.
Right.
Which is quite a substantial amount. So even the whatever capital gains you were going to pay, even that the child does not have to pay.
Okay.
So I think that is a very, very substantial saving that you could do. Anyway, the money is meant for her. There is no loss of control. You were anyway going to give that money to the
It's
child.
just that instead of you taking on the onus of that tax liability, and particularly debt is where it makes sense, because equity anyway, there's no long-term sort of liability after 1 year.
Absolutely.
But for debt, it might become far more tax efficient. Well, those are some great ways of being a little smart about taxes. Mr. Roongta, any final thoughts, any other final tips that you might want to leave our viewers with when they can be, you know, a little less scared of the tax man?
So I think the key is that when you have large monies which you are using either for yourself or for your children, I think do a little bit of, so these are some of the things that we discussed. I think when you have a professional helping you, I think your ability to enhance the returns that you might be getting is high. So
be transparent. They say never hide anything from your doctor and definitely from your CA. That's a starting point for sure. Thank you so much for joining in, Mr. Roongta, and analyzing some of these interesting insights with us. That's it on this week's episode of Money, Money, Money. Your feedback, comments, queries, welcome as always. We'll see you again next week.